Today we're going to cover the New York Stock Exchange Howler trend cells on the weekly chart with the New York Stock Exchange. And this was developed by George Haller. He has a book, you can Google it. It's heavily weighted toward the NYSE advanced decline line, but there's a lot more to it. In the interest of time, what we're going to do is just line it up to the New York Stock Exchange over the past 20 years and just see how it performs when it gets down to this negative 1.0 level. Was it a decent time to start looking at as a contrary buy indicator for the NYSE? So here we see it was a little early, but it worked well. Here you got a short-term bounce and a rollover, so call that a fail. This one worked well. This one you got a big bounce. You can't see it here, but that was a meaningful bounce in early 2018. Here it worked great. These two were early and failed. This one worked great for a bounce. This one failed. This one worked great. This one a little early, but you got the bounce. This one worked. This one worked. This one worked great. This one worked great. Little short-term consolidation. This one worked amazing during the crisis. This you got a big bounce. This was early and fail. This was a sideways consolidation and rollover fail. This bounce worked. This bounce worked. This bounce worked. Short-term bounce. This bounce worked. These two lines work great. Long-term move here. This worked great. Sideways consolidation and up. This was a solid signal. These two here marked a bottom as well. Here you got the bounce. Here you got the bounce. Here you got a great bounce. Here you got some sideways chop, so call that a mix to fail. This one worked great, and this one failed. So this is an interesting indicator to consider in the arsenal over the long term. I'm going to do a little bit more work on this one. I haven't used it in my analysis, but it's one I'm going to consider entering into the arsenal and do a little more study on the calculations and how it came to be. But on balance, it's pretty decent to look at for extremes, and then you measure it up with other indicators that are more precise in the short term and helps you probabilistically weight an advantage that you may or may not have. Hope that helps.